Good morning, traders. This is Michael coming to you from GammaEdge on June 2nd, Monday, June 2nd, with our pre-market morning strategy and briefing session. This will be a 5-minute pre-market prep where we run through all of our tools and discuss the trading structure and our thesis for today. So looking at our market trend model is based on the tick index. We continue to see a little bit of weakness come in. The overall structure is still bullish. The red, this is a longer term colored ribbon, is above the cyan. This is indicating that longer term market participants are still buying more than they are selling. And the bolded white CT is our instantaneous intraday cumulative tick. Again, that continues to the downside above our shorter term moving averages, indicating that there is some slight weakness in selling in the overall market via our tick index. The filtered cumulative tick up here, plus 1,000, minus 1,000, block orders by larger market participants. You see that was below zero for the past few days, indicating some selling coming into the overall market. The new highs versus new lows outpaced new highs on Friday, again indicating more stocks are being sold than bought, as well as our cumulative tick being below zero. So we'll continue to watch this. If you're a bull, you want to see the bolded CT start moving back above these shorter term moving averages and continue to the upside. That would indicate that sellers are taking back control of the overall market. And again, on a longer term look, the red is still above the cyan with a positive slope. So we continue to see buyers in control of the overall market. Moving on to our SPXA, again, this is the cruise ship, longer term expiry, larger positioning. Is call dominated. Structure still looks supportive on any moves or any pullbacks within the overall market, and that 6,000 level above is a key target to the upside, where there is a significant amount of out of the money call speculation. Moving on to the SPXP, this is our speedboat. Again, shorter term expiries, all expiries turned on. These contracts turn over much more quickly. Again, 6,000, that PGEX and COI level, the highest concentration of speculation to the upside. We are call dominated, so on any pullback, I'd be looking to get involved in the overall market. Again, maintaining the green net delta here, indicating that bulls or buyers are still in control. Do notice the confluence of the transition areas today. This will be important as you plan your thesis or your market trading plan. If we open below the overall transition, we would lean a little bit more towards weakness, possibly to the downside and pullback. And if we're above transition, this would obviously be a little bit more bullish for a move up towards 59.50. Moving on to the SPXP, 0 DTE, we have all of our transition zones outlined, as well as our drunken sailor range, so you can pause your player and look at those specific zones. The main zone I'll be watching today is obviously our drunken sailor range. This could be a little bit volatile and choppy within this overall range if we're below the overall transition. As of now, implied open would be around 58.90. So again, this could be a choppy zone within the drunken sailor, and below transition, we'd look for a pullback down towards 58.50. That should be supportive as we are call dominated within the overall structure. Above transition, we have a large area here at 59.20. That is our PGEX level. So getting above that, we'd look for 59.40 for a possible trade on the long side, and then up towards 59.50, 59.55. And we do see some in the money calls come in around that level. That most likely will be a area that will be difficult to traverse, again, unless we're watching the intraday volume command and we see a significant amount of out of the money call speculation. Our overall expected move today, 58.45 to 59.80. So again, that's within the overall area that we're discussing for our possible trades for today, above transition, below transition, and within the overall drunken sailor range. Moving on to the SPXP delta balance, we continue to see that weakening a little bit, with the blue line being your delta balance line. Again, this is just the separated planes above and below spot price, as well as the call and put speculation. We want to see this turn back around above zero and head back towards one, if indicating that call speculators are taking back control of the overall market. And then both planes staying above zero would be a bullish look. The SPXP GEX ratio continues to fall as price continues to go sideways within a consolidation. This is just indicating that short-term dated gamma and call speculation is continuing to drop, but market spot price continues to go sideways. This will resolve one of two ways. We'll see spot price come down with the weakness being coordinating with the GEX ratio dropping, or we see the GEX ratio start to turn back to the upside, indicating that out of the money call speculation is going back in the overall complex. And then we should see the spot price continue to move to the upside. Moving on to the trading view chart for this morning, we've outlined those on our web app, so make sure you take a look at those for the transitions as well as the drunken sailor range for today. Key level again to the upside will be 5,900. Need to get above those transition areas, and then P trans at 5,920 if you're a bull for a possible trade to the long side. And then staying below this area here, we'd lean a little bit more towards weakness, possible move down towards this pre-market low of 58.60, as well as this previous low of around 58.50. So hopefully that helps for the day. Everybody make it a great day. We'll be posting this on YouTube in just a few minutes. Follow us on X to look at our other updates that we'll provide throughout the day. And everybody make it a great day. Thanks.